Hey everyone, this is Michael Ben-Ghiat. This is the Stock Picks weekend video for May 28th, 2022. Hope everyone's having a nice long Memorial Day weekend. We'll keep this one pretty short so you can not focus on the stock market over this nice long weekend. Okay, so we're going to go ahead and just go through the current market environment pretty quickly, go through the stocks on our watch and ready list, and then we do have one stock that's on our portfolio. Here's our disclaimer. You can pause the video and read that. So real briefly, our stock environment indicator moved to yellow. We're starting to see much better action in leading stocks. They're starting to break out quite a bit and hold. So we still consider the best strategy is probably swing trading. We've had a lot of failed rallies. So I'd say probably taking profits sooner than later would probably be the best course of action here. That's been the case pretty much all year, and sometimes you only got a couple days, and then before they would fail. So we're going to kind of use that as going forward. If the market really turns to a rip-roaring bull market, then seems unlikely, but we'll change that. And we've also upped our recommended stock exposure up to 25%. So we're now looking for stocks so we can add exposure. And a lot of the charts, as you're going to see, they're just not a lot of crisp entries, but that's what it is. The other thing, too, is that the leading stocks so far, it's all been about energy and commodity names. And some of these names are getting extended, probably getting closer to their tops than the bottoms since they've been running up. A lot of them are up over 200 or more percent. And then the other risk is that if the market starts rocking again, good chance that the money's going to rotate out of energy and pile back into tech names or something else, setting them all down. So again, another reason to be kind of quick on the trigger to take some profits off the table, at least enough maybe to do what's called a free trade, where you sell enough of it that you've reduced your stop risk, and then basically the stock could come all the way back down and you just end up breaking even. But that's the idea, is to remove the risk as soon as possible. Okay, so let's go ahead and take a look. I'm going to pause for a second. We'll come back and take a look at some of the stocks on our list. Okay, so here's the first one. Golar Liquid Natural Gas, and that's LNG, and the ticker is GLNG. So this is one. This is our ready list, and it's just at the very bottom of it. I think our buy was right about here. Let's see, current price, 25.10. Yeah, so we were coming out of this little consolidation here. Just broke out on Friday. We had another pullback on Thursday, so it's been a little volatile. We don't really like that, but this is what we're given. And we've also had some larger volume spikes in the downside than the upside. So it is on the ready list. We'd love to see it kind of tighten down over here and then take off, but we'll see what we get. But it is ready. And it's one of the leaders going forward. It's just about to make it all-time highs again. We'll skip Sasol. That's one of our positions. We'll come back to that. The next one is Cadre Holdings, and it's one of the few stocks that is not a commodity stock or an oil and gas stock or a chemical stock. This one's interesting because it's an IPO that's actually been holding up. This is one of the very few. And you can see here we're getting some nice volume spikes to the upside. So those are the positives. We also have a nice RS line. We're at 97. It's beating all but like 2% of stocks. And this is all-time highs here. It hit it on Friday. The only drawback on this stock is that it is very thin. It only trades 68,000 shares a day. So got to be careful about that. In fact, on low volume days, you're just down to like 20,000, 30,000 shares. Now, this can be great if it's a big buy order comes in. It's going to send this up, 10, 20%. But a decent-sized sell order is going to send this down. So it makes it more volatile. But we're getting some pretty decent action. It was quite volatile here, not really tradable. You can see right here, this is where it would get above 25, call it 90, and sellers would come in a few times there. Tried again. Kept setting it down. Looks like we got support of the 50-day, a little messy here, and then it just broke out when the stock market started to head higher and broken out. So We're near the top of the buy range, a little bit more to go. So this one might have to let it go. Maybe it'll come back, tighten up, and give us another entry. But we'll be watching this even if it just takes off without us. So just because it is giving us the characteristics of a leader, especially coming out of an IPO base. So this one, Olin, they're a specialty chemical company. I'm not quite sure the combination. They manufacture chlor-alkali and small caliber ammunition. Unless chlor-alkali is used in the manufacture of gunpowder. I'm not quite sure what that's all about. But here we had a nice base that formed a nice cup with handle. The handle was a little deep here, was 17%, which is a little bit of a flaw. But it just came flying back out of that into this buy zone. It's been quite volatile, and then it's just taken off. Our buy zone was not at this 60. Our buy zone was at 64.60, which is, coming out of this. It broke out. Our buy zone was right about there. We had a little pullback from the breakout, and then it's come back up. This is real common to see a few days of a pullback and breakout. So that one's also ready. Now that we have a little more leeway to buy stocks, we may add some of these, or they might just take off and we'll just wait for the next batch. This one, Western Midstream Partners, is it's a very nice, it's a limited partnership, but it also pays a dividend. And if you come over here, it's actually paying 7.2%, which is very good. And it's doing nicely. It has in the weekly chart, there was a RS Blue Dot. Actually, I need to update that on a chart over here on the website. But here, a pretty constructive chart. It was a consolidation. It came out of this cup, broke out nicely, though this may have shaken you out if you were in it. It was a little bit of a sharp shakeout here. It came back and then broke out. But you can see it's been very choppy, but you can see how it kind of tightened up. Here we had like a big move down, and then here we had a smaller move down, and then an even smaller one. So that's a nice sign, and then it's broken out. And RS is strong too. Earnings and sales were good recently. So that's the stocks on our ready list. So let's go to the watch list. First one is Grin, and that's Grindrod Shipping. A lot of these stocks have been doing pretty good, but they've been volatile. And you can see that here. It's just too much volatility still. I mean, look back here in end of last year. Nice, smooth, tight trading. And then you can see what's happened here. So we don't like this, but it is right at all-time highs. It's outperforming, almost all stocks. So we're going to keep watching this to give us a better spot to buy. The next one is Valaris, ticker VAL. It's another oil and gas drilling stock. This one actually has formed a kind of a rare ascending base. You can see how it's came down, came up, formed another base, came up, formed another base, and came up. The ascending base has a really good record of just continuing higher after that. So, but it's been a little volatile too. So we do have our buy 60.95. Yeah, we're coming in if it breaks out right above this little resistance here. That's an early entry. The official entry would be coming above the 61.70. So we're going to be watching that. 99 RS is great. So it looks pretty good. The next one is Veritiv. If you've been with for a while, you start seeing some of the same names. They keep coming back. And the reason is that they may be buyable, but they're still showing a ton of strength. Like the weakest stock we have in this list is 95 RS. Most of these are 99s or 98s. And it just shows you while the S&P has been declining and declining, there's that black line, these have been coming up and making highs. And this is a paper and paper products company on the defensive side. So this may just be something that really doesn't do much. But one thing that may be happening, they have very strong earnings and sales, increasing margins, which is, you always want to see that. But also look over here in the the annual earnings. We've come from $1.67, negative earnings for a few years, then and then suddenly look, from $2 to $9 to $18. These are 100% plus moves. something is going on here that is that's a huge increase in earnings. So that's something that it could be a nice winner that you just will fly under most people's radar because they think, oh, it's a paper product company. Who wants that? But you learn these lessons. There was another one, I think it was Atkore, ATK. No, Atkore is electrical mechanical products. Another one that's done actually very, very well. And it just seems like a boring, yeah, this was an IPO, but look at this move from 20 to 120. Now, there's another one that was like just made stuff you think, oh, why would you ever invest in that? And it was a very, very strong performer. So you never just let your bias determine. It may not be some sexy tech stock, but who cares if it's going to have a nice smooth ride up 300, 400, or 500% and not shake you out? That's much better than buying a company like the Trade Desk that will also go up that much, but it's like a bucking bronco trying to hold on to it. I had one I bought a long time ago, Extra Storage Space. It was a storage company, a REIT, and I held that for like 10 years because it was so volatile. It just kind of just crept up every week, not every week, but just it never showed a lot of volatility. Just kind of just headed up for 9 years and just kept going. And finally, I sold it. I think about up 1,000% or something from where I bought it. And it never gave me any reason to sell it. It just kept going up. So we love those. They're hard to find, but especially these days. But they're out there. So we're always looking for them too. We'll go. Next one is Eagle Shipping, another shipping company. We're starting to see them again. Pretty sloppy here. A lot of volatility. So we're watching it, but it is doing well. Last one here is Northrop Grumman. Again, you can just see. Look at the nice tight trading over here, and then much wilder move here. But we do like the fact that it's had this cup with handles, gave a lot of volatility, but we're right below this buy zone, and it's tightening up. Look at these closes. We don't talk about this a lot, but you can see here we've had 4 days, and the price has closed just about the same price for 4 days in a row. Sometimes in these weekly charts, you'll see what's called 3 weeks tight. I don't think we can see. Yeah, here's tight area, 3 weeks, which means that just during this week, these 3 weeks, the price it might have vacillated all over the place, but it ended up in the same area. Generally, these is a bullish sign of institutions just happy with what the price is. They're not really being pushed to sell, or they're not being pushed to buy. But generally, those tend to go up at the top. In this case, it didn't, and it fell out the bottom. But then that's there's no 100% things. So, but that's generally what happens. So, and let's go that's it for the watch list. Let's take a look at our only position, Sasol, ticker SSL. It's a South African company in the oil and gas refining. This one too, because it's an ADR, it means it's just a foreign company that trades in the U.S. You get a little bit more gapping action than you'd see normally, but it did set up pretty nicely. We had a little consolidation base here, and it had some nice tight trading here. It did come down, but then it tightened up again, and then it broke out. And this is where we're in the trade. We're up a couple percent, and nothing too exciting yet, but hey, it's not down 2%, so we like that. And also in this case too, you can see earnings are growing pretty strongly. And this, unless the oil market falls apart, should probably do well enough to hopefully give us some decent gains, and we'll say goodbye to the stock. Let's see, I'm going to do one quick thing too. I'll pause for a second and be back with different charts. Okay, so here I just want to go over a few other ones. These are Thinkorswim charts. And if you want to go over, you can see here, it's a different perspective with these charts versus the MarketSmith charts. And so let me see if I can zoom in here a little bit. Yeah, so here you can see we're getting some good action. It's tightening up, tightening up, tightening up. It tried to break out and came down. So, this is Arch Resources. Now this stock has actually made a huge move, so we're a little wary of it at this point because of the giant move it's made over time. But we're watching that. A couple other ones. You see here too, it's starting to kind of come back up to this thing. We're watching that. We don't have it on our official lists yet. Here's another one. That's Flex LNG. It's on our watch. A few of them, like this one, is already broken out. It just took off without us. Here's one we're watching. Star Bulk Carriers. Again, another one that. Let's pull this over here. Let's zoom in a little bit. Yeah, you can see again. It's kind of tightened up. Came up to this area where it used to get kicked down by the sellers. Came out, but it's having a little struggle. It's just, so we're watching this. This may be one that we add to the list too. Let me see what else. There's a few others. That one's already gone. It didn't really give us much of a, there was a little area here, but it just came flying out. So that's what happens. We missed that one. This is another one, done a huge move that we may just have to set that one out. A few others we're watching. USO, we did have this on our list, and it did break out. Now, this is actually one of the better charts that we've seen in a while. You can see, look, the contractions. It had a bigger move, then it got tighter, then tighter, and then tighter, and then it got really tight, and the volume came down. We love to see this. And this is the U.S. Oil Fund, which actually is interesting. It's actually giving us the impression that this is going to go out the top. In other words, oil prices are still going to be heading higher, which, of course, it did break out. Again, because we were in a correction and things were acting pretty poorly, we just kind of watched this one. But we might get it again. It might come back to the breakout point here and then turn back up. We might try to add that. So I just want to show a few other stocks here from a different perspective. Like this is that Cadre holdings. You can see here just tighter areas here. It broke out and it's been kind of hitting that area where the sellers have come into. Here's Olin. We looked at that. That's also coming up right at breaking out of its little area. So these are ones on my sort of bigger watch list, and I use this to put on the ones that I think are best set up, have the cleanest setups for ones that we can actually add to our portfolio and the service. So that's about it for this week. Hope you have a great rest of the weekend, and we'll be back on Tuesday. Okay, thanks.